Welcome back, everyone. My name is Michael LeBlanc, Director and Senior Portfolio Manager at Canaccord Genuity Wealth Management, and thanks for joining us again this week. Today is our live show where we talk about everything going on in the market and everything we see coming up in the next week. And we're also going to be talking about ethical or environmental, social, and governance investment, or ESG investing today, just to bring everyone up to date. We've done previous videos on ESG investing, but it continues to grow, continues to be a focal point in portfolios. So we want to cover that off as well this week. So with that, this is next week today. And as always, everything that we cover on here is for information purposes only. Do your own due diligence or reach out to us. Just go to mikeonmoney.com, give us a call, send us an email. Happy to answer any of your questions. All these strategies, all the things we talk about here, may or may not be right for your portfolio. So always do your due diligence before diving into anything. So with that, let's start things off. As always, talk a little bit about what's going on with the COVID pandemic. Not a ton to talk about here. Proof of vaccine is now required for everyone 12 plus in BC. The full vaccine passport is now in place. It was, you could have one shot. Now you've got to have both. British Columbia's also lifted their capacity restrictions. So, the Canucks games, for example, full capacity. So that's kind of back to normal. And then around the world, we're seeing some other openings and some closures. New Zealand's government, is going to expand the vaccine mandate and put in some more restrictions, including, things at restaurants, bars, gyms, and hair salons. So it's still not out of the woods. The only thing I'm going to say on the COVID updates is we'd love to hear from you. I'd love to hear from everybody. We're headed into the Christmas season or the holiday season. Let me know what you're doing this holiday. So obviously last year we couldn't get together with the big families. We couldn't get together with bigger groups. Now that things have lifted a little bit, I'd love to get a sense as to what everyone's planning, or if you're planning on traveling. The Canada lifted their travel advisory warning now. So for non-essential travel, they lifted that. So does that mean you're going to start traveling in 2021 or 2022? I'd love to hear that. And also if you have been traveling through 2021 as well. So let's take a look at what's going on in the economy. Things that we want to watch for this week is the U.S. Home price index. We're also getting home sales for September coming out. Consumer confidence for October is coming up. And as I mentioned last week, we're diving right into earnings season. So Raytheon Technologies, General Electric, UPS, Alphabet, which is Google's parent company, Microsoft, Visa, Twitter are all reporting this week. So we're going to keep a close eye on that. The earnings season. Going into the earnings season, it was expected for about 70 to 80% of the reporting companies to have a good season, better than expected numbers. So we'll keep an eye on that because if some of them, if we start seeing some big misses, that's going to bring some volatility into the market. Overall, though, the stock futures have been pretty strong, especially in the US. A little weak this morning in Canada, but pretty strong in the US both yesterday and today. And as I mentioned, that investors' confidence been buoyed or held up quite a bit by the majors, banks, and companies and manufacturers. All reported some good numbers for the quarter. A little bit of jitter still around that inflation and labor market. We'll touch a little bit on it today as inflation is continuing to be the main topic when we talk about market volatility these days. From 0 to 12 billion. So I don't know if you've been following this, but Trump did a SPAC. We've talked about SPACs, Special Purpose Acquisition Corps. So he launched one in the US for a technology company. He raised $12 billion in it. It performed super well. And he's launching a competitor to Twitter called Truth. It's already running into some problems, potential lawsuits from the technology that they use for the backbone of the product. It also kind of had it's not actually out yet, so they haven't actually launched it yet, but I guess the site went live, so people were able to go in there and on the website anyway, and take name or preserve names and put up some spoof accounts and already getting into trouble. But anyway, that's been going on. There's big short positions building on it. A lot of people think that it's going to flop, that the technology is not there, and try to take on Twitter itself. Obviously, a big challenge. And as always, anything around Trump seems to be politicized. Is this going to be a Republican kind of communication base? Because a lot of those the extremes have been kicked off of the Twitter platform or banned from the Twitter platform, and is this where they're going to post their information? So we'll keep an eye on that. But if you weren't aware, you can follow that. As I mentioned, the platform is called Truth. Drug pricing reform opponents are winning most of the pharma lobbying money. No surprise there. So some of the Democratic Party lawmakers are holding up and opposing the proposed drug pricing reforms. Are getting some big donations from the pharmaceutical industry to help them stave off putting this into place. And this has been ongoing for many years. Of course, it's no secret in the U.S. Americans pay a lot more for their prescription medicine than other countries, especially they're constantly compared to Canada with our universal health, of course, controls around the pricing on the medications. So we'll keep an eye on that. But looks like pharmaceuticals are throwing a lot of money at the lobbying efforts to try to keep that out of law. Fund capitulation on U.S. bond reaches historic levels. So hedge funds and speculators alike are dumping the U.S. Treasury at a pace we rarely see. And this just goes to that inflation expectation. So it's this battle of when that first rate hike is going to happen. Remember, the original target was 2023. Is that going to be maintained? Are they going to bring it into 2022? And if they bring it into 2022, how soon? Is it going to be early, mid, later? Most of the forecasts are still looking more mid to the third quarter, perhaps. A lot of that's going to have to or going to be decided around the supply chain issues, because the supply chain issues are really driving that inflation number. And how long can they wait off or stave off raising those rates for inflation to normalize as the supply chain gets caught up? So that's what we're going to keep a close eye on, and that's where we're going to see most of the volatility in the markets. Other news out there, the corporate tax, of course, been taken off the table for the Democrats to fund their infrastructure bill. Within the party, they couldn't get enough support to raise corporate tax, so they're focusing on billionaires to pay more tax and pay for that infrastructure bill that they're trying to get through. Now, with that, we'll talk a little bit about Tesla, but Tesla hit $1 trillion in valuation, which means Elon Musk made $39 billion yesterday. So maybe he can afford a little bit of tax. So we'll see what they come out with, their proposal that they're putting together right now. Twin Peaks, just talking about the oil demand. So we're looking at an energy transition to a peak demand for oil specifically. Of course, if you looked at the pump, the prices are high here in Canada, but that's around the world. It's just been that spike in demand and the decrease in supply. There are a few things going on. We're going to touch a little bit more, potentially reinstating the Iran nuclear deal in order to lift the sanctions on Iran's oil and, dealing with the supply issues. But that continues to spike. We've seen a little bit off the peak price in oil, but still holds in the mid 80s. So it's still up there. The U.S. Treasury has named a former JP Morgan executive as racial equity czar. So this is the first time they put the position in place. So Janice Boulder, who worked with JP Morgan, in their philanthropic arm was hired, so she's going to be in there and working to bring racial equity to the Treasury Department. GM and Ford are likely going to report some lower earnings, and that's going to reflect the chip shortage. So this is going to be first kind of real look into how this has impacted the automotive companies, and that's going to pretty much be across the whole sector. So we'll keep an eye on how much of impact it had to their sales numbers, and what that might be leading into the fourth quarter, because the chip shortage, of course, isn't going away anytime soon. The dollar is in the dirt. Big agriculture firms are paying farmers to try to use their soil to hold carbon. So this goes into the environmental investing, but some of the biggest global agriculture companies are out there competing for this new way of trying to get carbon neutral or reduce carbon dioxide by having it being retained in the soil. So having farmers use different technologies to keep that in the soil. So that's something new we haven't really seen push. The technology's been growing. We'll keep a close eye on that as well. So let's take a look at what's going on this week. As I mentioned, earnings season. So Alphabet, Google's parent, is expecting to show a rise in third quarter revenue, mostly on online demands, which has really spiked since the pandemic closures, as companies have, of course, through the closures, turned to online versus traditional media. And then we've seen a lot of those advertising budgets being shifted to the digital front. We're also looking at the impact of Apple's new privacy rules on Google. So we talked about this last year. Apple did an update to the technology a little while ago. You probably noticed, if you have an Apple phone, a lot of the apps now will ask, do you want to share your data with that particular app? Because prior to that, different apps could track where you went, what you were looking at, what stores you shopped at, all these different data points that Google and other companies could buy or sell to advertisers to better target you. So with Apple kind of turning some of those things off, that did affect some of those advertising dollars. So we'll see how much of that affected Google as well. Microsoft's going to be reporting. We're expecting them to post a rise in fourth quarter earnings, mostly on demand for Azure and Microsoft 365 apps, which also includes their Teams, which is their online platform, very similar to this. So those numbers should be staying strong, as a lot of people are still using these apps. Even as people return to work, there's still a lot of people continuing. Travel's not back. A lot of meetings still happen like this. Twitter is also expected to post a rise in their third quarter numbers, again through those advertising dollars, as more and more people look at that platform as an advertising alternative. Top news this week: Tesla, of course, zoomed past the 1 trillion mark, as I mentioned. As more and more of the market's betting on the EV future. It's actually funny, if you look at Tesla at $1 trillion, they're now bigger than, I think it's 12 of the top automotive companies combined as far as their market cap. But of course, they don't represent that much market share when it comes to the vehicles. So this is a lot of speculation on the future growth in that EV marketplace. It's going to be a very interesting story to follow as we go through the next year or 2 years, as more and more car manufacturers are shifted to EV models or completely switching their line to EV. You've got Volkswagen committed, Ford is coming out, Toyota's pushing a little bit. Toyota's pushing a little bit more of the hydrogen solution, so that's an interesting twist on it. Mercedes, BMW, they're all really looking at beefing up their EV lineup over the next 1 to 5 years. So that's going to play into a much more competitive market. So we'll keep a very close eye on that. Facebook, if you haven't been following this, of course, the whistleblower who was testifying down in the US, Frances Hogan, is over in the British Parliament now testifying, and of course, she released the Facebook papers. So I think there's about 10,000 documents that went to over a dozen news outlets that have poured through those documents, and again, not a lot of information that we didn't think Facebook was doing, but just to see it in print and to see the depth in which that they were actually targeting some of whether it be hate speech or not stopping bad information or creating civil unrest. And it's not just here in North America, but non-English speaking countries, where we've seen genocides of war and complete human rights violations, where they didn't put in enough employees who spoke the local language to really manage that or to help contain misinformation in those situations, flaring up the hate, flaring up the unrest even more. So there's going to be more and more out of this. Of course, if you haven't followed the Facebook story, their solution to all this is change their name. So Facebook is looking to change the name, but it's very much, and I believe they've had this announcement out, or at least they've leaked this announcement. Facebook itself won't change the name, just the parent company, much like Google did with, or Alphabet did with Google. Alphabet became the parent company of the greater corporation, and Google is still, one of their main arms or revenue arms for Alphabet. Moderna has finished their testing for younger children between ages 6 and 11, and they're going to be submitting that to the global regulators very soon to get approval for them. Of course, Pfizer's already done that. And of course, in the US and in Canada, that's pretty much approved, and we're going to see that roll out. And also, I believe it's today, we're going to be hearing about BC's booster shots. So looking at how they're going to roll that out and what the timeline they're looking at doing that on. And it'll be really interesting actually how they do it as far as the mixed vaccines go. Are they going to continue down that path of, mixing it, if your last shot was Pfizer, you're going to get Pfizer, or could you actually get an AstraZeneca, Moderna, Pfizer shot as your booster? So we'll keep a close eye or listen what Bonnie Henry says about that later on today. PayPal is currently not pursuing Pinterest. So there was rumors out there that they were pursuing to buy Pinterest for about $45 billion. They came out and said, no, they're not. That'd be a weird mix for them. Not really a vertical, and I think would really enhance their platform a lot more. Of course, PayPal is a digital payment company. Pinterest is more of a social media type of company. And PayPal seems to be focused moving into crypto or digital currencies as well. So, to shift gears towards Pinterest might not have been the time in there, might have just been a little off. So we'll see if they change their mind down the road. But for now, PayPal is not pursuing that. Amazon Staten Island warehouse workers are filing or want to file for a petition for a union election. This is an ongoing story, of course, with Amazon. I know Amazon takes a lot of flack, and maybe they should. I've never worked there, can't say one way or another, but there's certainly enough reports out there from workers that, whether being overworked or underpaid, seems to be a lot of legitimacy around their complaints. But if we look back, Walmart went through very, very similar growing pains. Anytime you have a large, super large retailer like Amazon, Walmart, and such, who are fighting for every penny of your shopping dollars, it is very competitive, very low margins. So that means they push, whether it be suppliers of product or employees, to keep the cost down as much as possible. So we'll see how that goes. Obviously, Amazon to date has put in a lot of effort to keeping the unions out of their warehouses, but at some point they're very likely to lose that battle. On the currency front, the U.S. Fed, it's still working really hard to fight off that inflation, to keep the dollars as steady as possible. We do see inflation kind of hitting new highs, both here in Canada and in the U.S. But with that, we do expect the US dollar to continue to show a little bit of weakness. And the EU or the euro continues to trade around its current level. Thursday, they're making the decision on their interest rates. So everything we see in the market right now is kind of indicated they will hold the current rates. On the bond front, we've seen it creep up a little bit, and that's just going to continue that trend, the 10-year bond trend, moving along with inflation. On the oil front, as I mentioned, we did see a little bit of decline, but from early week gains, but still in the mid 80s. There's a lot of talk, as I mentioned, in Iran and the European Union bringing back the Iran nuclear deal, which the US opted out of. But of course, we've got a new government down there, whether they can bring that back into place, which would ultimately lift some of the sanctions, particularly the one around their oil exports, which would ease up a little bit of the world supply issues. Again, not likely to drop the price of oil dramatically, but at least slow the increase on the pricing. Copper showed a little bit of weakness on its price, but still it stays very strong in this market. I don't expect that to change either. We're definitely in a materials market, and that's typical of an inflationary period. So with that, let's talk about ESG and ready or not. Do you have it in your portfolio? Should you have it in your portfolio? And what does it really mean? What's this wave, ESG wave like? Because it's very different from even a few years ago. A lot of things have changed, and a lot of things you should be looking at in your portfolio when thinking about doing it. So with that, this is Mike on Money. So ESG, as I mentioned earlier, environmental, social, and governance investment. Sometimes the E is swapped for ethical, but kind of the same idea. It kind of depends on your particular focus. Oil and gas companies, currently make up about 2% of the S&P 500. And 12 years ago, they were 15% of the S&P 500. So that just shows you the shift that has been happening for a while. And in fact, ESG companies in a lot of studies are shown to, if you've had an ESG focus, has outperformed a non-ESG portfolio. Not in all periods and not in all cases, but they're certainly seen a lot of growth, and nothing more has brought it to the spotlight than the last couple of years. As we hit that reset button on economies around the world, as everything shut down, when they went to turn things back on, governments really started to take a hard look and say, okay, we need to bring jobs back. We need to kickstart the economy. We need to invest billions of dollars. Do we invest all those dollars back into, the traditional oil and gas or resource or energy markets that we know are going to be declining over the next, and you can pick any time period you want. You want to say 5 years, 10 years, 30 years. We know it's steadily declining, which means jobs will slowly be disappearing in those markets. So do you spend a lot of money to try to bring jobs back that have a timestamp on them? Or do you spend a lot of money in a growth area, renewable energy, green technologies, that we know are going to produce a lot of long-term jobs, but also probably double or triple those numbers of jobs over, the next 5 to 10 years as that industry expands, as that industry grows. And that's what most of the world has done. And even companies, we've talked in previous weeks about BP and Chevron and Exxon, making a shift in their business makeup to more renewable, moving away from the traditional, oil and gas or fossil fuel side of the sector, because they know that's where things are going, and that's what's created a bit of the shortage. We've seen a lot of these companies move, production prior to getting the new production online or prior to getting the full infrastructure in place. So that's what we're looking at when we're talking about ESG. Obviously, the social side of it doesn't always mean environmental. It means good for society, and governance is kind of, are they acting in a responsible way? Are they taking care of their employees? Are they, being good for the environment? Are they being good for their geography, the countries that they're in? Are they helping grow the economies? And are they delivering what their customers want? So that's what we're talking about when we talk about ESG. And as I mentioned, despite the recent rise in oil prices, investors are looking at the long run, right? The diminishing returns of those companies, and really looking at where the future growth is going to be. Until a decade ago as well, you know, trying to account for the drop or the sunset of the fossil fuels was deemed very aggressive because it wasn't widely accepted. But that acceptance has grown more and more. Obviously, with climate change happening, you know, more and more people are focusing on it, more and more companies are focusing on it. But not only that, I think the real thing you got to keep in mind, and this is what you know, when we talk about the second wave, it's not just personal preference anymore. Entire institutional, the Ontario Pension Fund. There's just recently a report came out. I believe it was 35 to 37 different institutional pensions funds have basically that control about $5.5 trillion in Canada, investment dollars, have insisted that all their portfolios be ESG. So if a company wants to attract investment dollars, they have to take this seriously. They have to put in the effort. They have to be conscious of the impact they're making on those three factors. So more and more, we're going to see companies focusing on it, and more we're going to see investment dollars flow into it, even outside your personal perspectives, just from a greater cash movement of cash in the investment markets. You know, so what does this look like? So the pathway for generating superior risk-adjusted returns, when we talk about ESG, really looks at you know, a few things. One, really identify the theme you know, that they're focusing for. So if a company's saying, oh, we're ESG, well, how are they being ESG? Because there's going to be a lot of fakers out there. There's going to be a lot of people throwing that term around. We've seen that through history. You know, if you think back to, you know, the cryptocurrency, the first, you know, back in 2018, you know, blockchain was the big word being thrown around. And there was my favorite story from that was there was a iced tea company in New York that just changed their name to Iced Tea Blockchain Limited, and their stocks went up 30%. So look, you know, really see where the real growth themes are happening and which, you know, companies are putting in that put in that effort, and really look at what might handicap that growth trajectory for the company. You know, where are they going to have challenges with their ESG efforts? You know, it's no longer throwing a dart and saying, hey, that company's got green in its name. You really have to kind of know what they're doing and what their challenges are going to be as they put that effort in place. And take a look at that success map that they're going to be trying to implement. You know, how is it going to impact their assets, the sector, the industry, the company dynamics? How long is that going to take to shift? You know, big companies with a lot of legacy issues are going to have a harder time shifting, you know, than others. And some sectors are going to have a harder time shifting than others. So, you know, when's that reward going to happen? That doesn't mean you shouldn't look at it. You definitely want to have a longer term perspective when you're looking at ESG in your portfolio, not necessarily short term, but what's it going to take to get there, and what are going to be the barriers along the way. Focus on what will inevitably turn from macro to micro, right? So right now, or certainly over the last couple of years, a lot has been on macro, you know, the government dollars to say, hey, we're 2030, 2050, we're going to get there. Things are going to start to, you know, really shift to the micro. You know, basically, okay, you said you're going to do this by 2030, but when and how quickly and what are those impacts going to be? So is it going to be the next quarter, in the next year? When are you going to deliver on this? Because historically, a lot of companies have made these promises, right? They said, oh, we're going to change that. Coca-Cola is a great example about plastic waste. You know, according to a lot of studies, they're one of the biggest contributors to plastic globally, or plastic waste globally. And, they've put, out targets, many targets in the past to say, oh, we're going to fix it by then, or we're going to introduce this by then, and then never get there, and then just set a new target when they get too close to that target. So really looking at the micro is going to come in. Big impact on the portfolio is when are these things going to be delivered, and are they being delivered in the time manner or the time periods that they're predicted. And all companies have to seek to move down that ESG spectrum, right? Like all companies have to be aware, as I mentioned, a lot of institutional money, not just the retail money, although the retail money is really looking for ESG, but the institutional is insistent on it. And the difference between a retail and a institutional investor, when we talk about ESG investing, is really retail can change their mind from moment to moment, from investment opportunity to investment opportunity, whereas institutional put in policy and they cannot break it. So that money is flowing more and more to that ESG. So companies have to be very aware of that and how that's going to affect investor dollars coming in. So actively managed, if you're looking at an actively managed approach to your ESG, what should you look at? Well, success will require specialized knowledge. ESG is a buzzword that's been flowing around for a good 20 years. What are you actually getting when you say you want ESG? Whether it's be a mutual fund, an investment, private investment portfolio, working with your advisor, what are you actually getting when you ask for ESG? It takes a lot of due diligence. One of the biggest problems with this, with the due diligence issue around ESG, is there's no global standard. They're working on coming up with a global standard. They're not there yet. So if you go to one shop or you read one thing, that definition of ESG could be very, very different. So you have to know what you're buying and you have to know what you're asking for. So have that conversation. If you're curious about what the options are, by all means, give us a call. The spectrum is massive, as to how far you want to push the needle and what areas you really focus on, what ESG means to you. So, believe in the value of diversification. So don't, just jump into, solar panels or wind technology or EV cars or right? Like, make sure you stay diversified. There's a lot of ways to diversify your portfolio on ESG. There's even some investments out there that, the industry or the sector isn't necessarily, environmental, social, or governance. They might have good governance. They might focus on social, but they're not environmental. But they can buy offsetted carbon or carbon offsets to neutralize their carbon impact. So there's other ways to try to get access to maybe industries, companies, or sectors that you're interested in, but still keep that theme inside the portfolio. The theme here is the low-hanging fruit of, just because it has green in the name or has ESG in the name, you've probably seen that story play out. Really identify companies who are really going to benefit from the change and from the trend that we're seeing out there. It's as I mentioned, it's a new era. There's a lot of challenges out there. Be careful. Some of these passive funds that will box ESG, you might be getting holdings in there that are not in line with what you want to achieve, or even worse, have some of these just theme names that you're not actually getting ESG performance. It's just, you might see some short-term gains as the name brings some investment dollars, but it always goes back to the theme. I always point out to people, really focus on knowing what you're buying and why you're buying it. And we're in a period now of this ESG investment wave that becomes very, very vital, that you really focus on. You focus on those things and make sure it makes sense to your portfolio. So with that, always send in your questions to mikeonmoney.com. Give us a call. Happy to answer any questions. You can catch this video on our YouTube channel, also our podcast. With that, we'll see you next Tuesday. We are changing the format a little bit next week. We're going to focus on next week today. So we're just going to, we're going to focus on the markets and we'll have a separate focus video just to keep things, from a timing perspective, being conscious of everyone's time. You'll still get the same information. We're just kind of presenting it in a slightly different way. But with that, have a great week, and we'll talk to you in 7 days.